Look at the move in DiDi today, another casualty of a Chinese IPO. Another reason why you should be very wary when investing in Chinese stocks, but I think that this could present a very interesting opportunity right now as an investment. DiDi Global. Welcome back to the channel. My name is Adam, and here we talk about stock investments, finances, saving money, as well as cryptocurrencies. And today we're going to be taking a look at DiDi Global, basically the Uber of China. And this company, unlike Uber, is actually profitable. And I think the reason for this is because of the high population density, which we'll talk about in a second, in China. And the reason for this move is China is taking DiDi off of app stores based on security concerns. Of course, the Chinese Communist Party wants to have omnipresent, omnipotent, basically be all powerful, and they're concerned with the data falling into the wrong hands, probably in America. Okay, so they're analyzing DiDi and their app for cybersecurity, basically. And because people aren't allowed to download the app anymore, this stock has taken a hit. And it recently IPO'd. It was about $16.51. That's where it closed on Wednesday. Or maybe that's where it opened. And basically, it's down by 26% since then. And I think actually this volatility is a good thing. And if you're not invested in DiDi yet, I think it presents a pretty attractive investment opportunity right now, okay? And this is also hurting other stocks. I own Alibaba. It's down by 2%. Sorry, other Chinese stocks. Baidu, which is more into the car company space, is down by 5% today. And I think that all of this has to do with, of course, DiDi being down. So let's discuss why this happened. So China cancels DiDi's ride. Last week, Chinese ride-hailing company DiDi went public in one of the largest US IPOs of the past decade, all right? And despite this move, this 27% over the past 5 days, it still has a 58 billion market cap, all right? So it's a pretty big company. This weekend, Chinese regulators stopped new users from signing up and ordered its removal from app stores. Its stock has plunged more than 20% in pre-market trading. So regulators think DiDi's trove of data could land in the wrong hands. A 2015 article making the rounds on Monday showed why that could be a problem. It analyzed how many DiDi rides went to and from government departments in one day and estimated how much overtime their employees work. So, of course, this is not what China wants other countries to get their hands on. They don't want to get their hands on this data. So DiDi's not the only one caught in Beijing dragnet yesterday, since Chinese Cyberspace Administration announced it was reviewing 3 other domestic companies and halted new user signups for their platforms. So China has become increasingly wary of its tech giants and is starting to curb their power, which has gone largely unchecked until the past year. In April, the Chinese government blocked the IPO of the world's largest fintech company, Ant Group, which is part of Alibaba, and forced it to restructure. And this is part of the Morning Brew, the newsletter that I get every day, and this is not a sponsored post, but I think the Morning Brew summed this section up very, very nicely. And of course, there's articles on CNBC. Also, Jim Cramer went on CNBC just last week and was basically advising everyone to buy DiDi when it was like at $16. So I think a lot of people are angry with Jim Cramer. I've heard people calling him the bald bobblehead pundit. So just something funny right there. But it's not funny if you're down 27% on a stock. But again, I guess it could be worse. So again, the fall came after China announced late Friday that new users in the country would not be able to download the app while it conducts a cybersecurity review of the company. Now, my main thesis here is that in the long run, China does not want to limit the growth of companies like DiDi, like Alibaba, like Baidu, because they're the main ones, or not the main ones, but they're a large part in driving the success of the Chinese economy. So although it is conducting a review, the growth might be slower in DiDi, but I don't think the growth is done at all, okay? And I think that this could represent a pretty attractive opportunity. I mean, I would wait for the stock price to settle down. It could move even more. 22% in one day is huge. So what you may want to do is start accumulating a small position here and then keep going downwards if it goes below $12, below $11, below $10, if you're bullish on the long-term future of China and ride hailing. And the reason why I really like DiDi is because even though that it's in the Uber of China, and Uber generally is not making a lot of money, because the population density is so high in China over some states in America, this makes DiDi be able to become way more profitable. And I'm not sure if they have any analysis right here yet. Analysis data is not available yet, but they're expecting to grow a large amount in the next couple of years. But yeah, looking at just the Bollinger Bands here, we can see this huge widening of the Bollinger Bands, which means increased volatility. And it went way below the lower Bollinger Band, and now it just kind of came into that. So again, right now RSI is 18. That's incredibly low. So this could be a short-term swing play if you want to accumulate some shares now. Again, if it falls lower, just keep on accumulating shares. But a lot of people are pretty angry. A lot of people viewing DiDi stock right now. Very curious how Cramer will react. He promoted this to a buy. Now watch him totally turn on it as though he never did. Could have been worse than did. Thank God it is not. Expected 50% or more in red. Did Cramer scream buy? So yeah, a lot of people are angry at Cramer because they just follow everything that he says. In general, I tend to avoid IPOs. Chinese IPOs are even more risky than American IPOs. And yeah, I think this is the reason what I just stated about the high population density. How come this company is reporting profits when Uber and Lyft aren't? Is the market in China so different from the rest of the world and that the company can more than cover its costs? I wonder if any of that suggested the high population density, but yeah. So now I would definitely consider buying DiDi. Okay, this could be a pretty contrarian play, especially with the news of China cracking down on it. But again, this is nothing new, okay? China is always cracking down on some company, and that's why I'm so bullish even on the likes of Alibaba. You look at, the 1-year chart of Alibaba, it's gone down 11%, and this is a company that's growing like double digits, okay? Are you kidding me? Like down more than 33% since its highs. It's just like, I think you'd be foolish not to invest in this stock, okay? This is actually one of my largest investments. Yeah, SoftBank actually has a vision funds that invest money in some of the top tech companies. It has more than a 20% stake in DiDi, and also SoftBank's share price, which is a Japanese company, it is not doing too nicely. It's down by 4% today, at 115 million market cap. Billion market cap. It takes a lot to move a stock down by 4%. So I think that this is mainly due to DiDi's move downwards. SoftBank is definitely hurting just because it invests a lot of money in DiDi. So yeah, those are my thoughts. I think that is a very attractive play right now. If you play it right, you could wait to not catch a falling knife, which means if you buy it now and then it falls another 20%. But if you buy now and buy a little bit more later, you could be set up in a pretty good position to profit if it does go up to $30 a share, okay? But again, just note that this is risky. I am not a financial advisor. Do what you will, but I think it could be pretty attractive. And yeah, that's all I have for you today. All that I ask is for you to grace the like button. If you're interested in supporting me on the channel, you can check out my Patreon to receive my real-time buys and sells, as well as the free Discord group where we talk about stocks. Yeah, definitely check out how to save money, to invest more money, and to make your money work for you with this video, which I'll also link down below. So cheers, guys. Love you all, and I'll see you in the next one.